What's up? Thank you. Thank you. Handsome man. Thank you. Thank you. I appreciate it. Bubba for president. What's going on? What's happening? Happy Hanukkah for those who celebrate. Um, I don't know. I thought maybe the tops were in, and then this morning I didn't think so, and now once again I think so. Again, it was pretty nasty sell-off from where we came, but of course, it'll all come down probably to the jobs tomorrow. Volume is still pathetically light. We followed Friday's sell-off with another sell-off today. So as you can see, where we were identifying what we thought were the tops before are still in place. So we'll see. I don't know. Look, there's so many problems going on and so much debt. I mean, let's face it. Some of these new programs that credit card companies are starting and that mortgage companies are thinking about doing, that doesn't help anybody. That doesn't release the problem that we have. The Fed is a bunch of fucking morons, cutting rates into a market that's near its highs. That doesn't help anybody. That hasn't helped the mortgage rates. I mean, what are they down at max? A quarter or a half from their highs, if at all. So, again, we can pretend that it means something of what they did, but they did nothing to help Americans. They did nothing to help the taxpayer. Their only help was to the banks. Okay. The four criminal fucking banks that run this country. So again, take it for what it's worth, but your interest rates are not coming down. I keep getting advertising. They want to keep me refinancing. I keep telling them that I'm paying half of what they want me to refinance it. Um, you know, Powell wants to blame tariffs on inflation for inflation. Does anybody here really believe that tariffs are the cause for any inflation? Does anybody here believe that? Just out of curiosity. Again, I respect everybody's opinion, so I'm curious. I'm curious what everybody's thinking. Anybody? Bueller? Wasteful spending. That's what I think. Okay. Look, again, we had high inflation long before the tariffs went into play. Can anybody disagree with that? Okay. There was high inflation. In fact, it was higher before we ever heard tariffs come into play. So again, look, I don't want to bitch about everything, but I'm tired of the waste, and it's obvious that certainly we saw some run up in the marijuana stocks because they're thinking about legalizing it federally, which would be great because that would be more tax dollars. But the real question is if the government got more tax dollars, okay, and it doesn't matter which side of the aisle you sit on, if the government got more tax dollars, would they actually let it benefit us, the taxpayer? What do you guys think? I'll let you think about that for a minute. And obviously, a very sad day. Rob Reiner got killed by his kid, supposedly. Whether you agree with his politics or not, nobody should go through that. And murder is not good. Uh, of course, they would piss it away. Okay. It just allows them to spend more of our money. It is no different than somebody buying something they can't afford because they can stretch the time out and how long they have to pay for it. Okay. There's the issue that you have in a nutshell. Okay. But look, the healthcare system sucks. Obamacare was the worst. The Affordable Care Act and Obamacare are the worst abomination maybe in history. Okay. Um, I mean, again, I don't care if you liked Obamacare or not. For the majority, it was an abomination of what healthcare should be. Healthcare has never been so much expensive as it is now. It was much better in the private hands of the companies. But hey, let's fight for people who don't pay for it. Let's fight so that the taxpayer can pay more money for it. Okay. So, anyways, losing jobs. Okay. Fed's cutting rates. That's not a good mix either. Okay. Stagflation, here we come. Uh, Look at the grain markets. That should be pretty much of a clue. Okay. We kept worrying about China, whether they can buy or not. Well, they committed to 12 metric tons. Okay. And yet grains keep going down. So again, we can make up all the slimy stories that we want. We can make up any reason we want. Facts are facts. Our government spends too much money. Our consumers spend too much money, and we have no business paying for illegals, okay, with our tax dollars. Okay. So, like it or not, that is my opinion, and I will stand by it. Okay. Because again, for me, it doesn't matter one way or the other. I won't be here that long. I'm already past it, but I certainly feel bad for the youth in this country and the money that they're going to have to pay. And it's California and New York are just a sampling of what's going to happen. So, anyways, what's up, everybody? Happy Hanukkah. Uh, Started the other night, and here we are. In the meantime, consumer credit is ridiculous, and the amount of money owed is ridiculous, and the people are spending like drunken sailors is ridiculous. But what else is new? Okay. What are we without a lot of debt? Okay. It seems to me that the American citizens are all trying to simulate the government and get so much debt that they're going to have to. Yes, you did tell me the boys suck in private time. I didn't bet them last night, but I could have used them. But could have used CD Lamb to have a little bit better performance. We would be wealthy without that. Of course we would. Precondition calling of individuals by private companies. Oh, you're talking about the healthcare? Yeah, I get it. But at the end of the day, it could have been worked out for a lot better. Could have been worked out a lot better than it worked out as it did. Okay. That I can say, again, I can say that with 100% certainty. And I don't care. You and I sit on the opposite side, but it doesn't matter when it comes down to this country and what can be better for this country. Like then this is not, it shouldn't be a political issue. It should have been something that could have been done easily. But because both sides are stealing the money, it became much harder. That's all. Anyways, here we are. This is the last call until January 5th. I'm taking the next 2 weeks off. Not much to do anyways. Obviously, I will send you guys a recording to remind you that I'm around and what I see, but there won't be an official call. In the meantime, I know you're ready, Connie, but as always, I will ask you, are you ready? Okay. So the dollar is right down there on our support level, just below 98 cents. Look, it would be a buy if I were going to play it, but obviously we don't trade it. But certainly it's been really just range bound for weeks in this range, 98 cents to a dollar. I don't see anything else change. Well, I don't know which states they were, but I would assume the states that refused it are happier than they don't have it. Anybody here in a state that refused Obamacare? Just out of curiosity. If you are, let me know what you think. Anyways, 98 cents to a dollar. The euro currency breaking up a little bit. Again, like the dollar was breaking down, so we have new resistance at about 119, which is an old resistance area that we were watching. So the bottom line is really, where are we? We really have been churning. Today will be 117 to 119. But overall, the big picture is 115 to 119. That's where we've been trading. Right? I mean, again, it's right in front of you. It's not, this is what you have to recognize as a trader, as an investor, as something that you do. You look at the areas, you look at the levels, and they're pretty identifiable. Okay. And you can pinpoint tighter, and then you can make an assumption of what you should do based on where they are. And certainly right now in the euro currency, there would be nothing I'd be doing right at the moment. But if it did rally to 119, I would be a seller. Okay. The notes, well, once again, they keep going down, which means interest rates keep going up, which means the Fed is full of shit. They're trying to cut down on interest rates and inflation. It just shows you that the Federal Reserve could care less about the American taxpayer. They only care about the banks. Okay. In the meantime, 113, excuse me, 112 is pretty good support. 113 is still resistance. And of course, for those of you who like technical patterns, how about a head and shoulders? Left shoulder, head, right shoulder, neckline. Okay, this is actually the neckline right here, which it has broken. Okay, if you're one of those fans. Okay, for me, 112 to 113. The bonds, same story. Okay, here we are. Okay, and there's the left shoulder, head, right shoulder, neckline broken. Okay, so, but again, here we are. Support is right about 115, a little bit, it's a little bit lower than there, but we can say 114. Okay, but it is still really, truthfully, real support is still right around 115. Okay, I mean, again, this goes back to what we've talked about the last few weeks. Look at the action. It's been on both sides of that level for the last 5 or 6 days. So either it's going to hold there and build support and try to rally, or it's going to break from there. Okay. The next level would go to, I think 114 to 116. Okay. And obviously the shorts we took at 118, if anybody took them with me, and at 114 on the 10-year are working out pretty well. Bitcoin got clobbered again, but at the end of the day, it's really just in consolidation, right? I mean, forget about emotion, forget about thinking about it. When you look at that chart, okay, yeah, it's ugly, but when you look at the last 20 days, what do you see? Thank you, brother. Happy holidays to you and to Diane. What does this chart say to you when you look at it? Yeah, it's ugly up here, but if you isolate it into this area here, which is again, it's 20 days, that's pretty good, pretty good look. What does it show you? To me, it says consolidation. To me, it says consolidation with a lean, and if it breaks right now, the break would probably be to the downside. Okay. After consolidation, markets will normally continue where they were going before. Okay. Not always. Again, there's no guarantee, but certainly it's failed at 92,000, a couple attempts to get through it. It is held at 85,000. Okay. With one exception. So I think it's pretty easy to identify 85,000 and 92,000. It's a little tighter range than we usually have as well. Okay. But I mean, if I look at, excuse me, I'm a fan. As you know, we have a lot of Bitcoin related stocks we cover. I think it could go lower. I'm not worried about it. I'm not selling it because I think it could go lower. It doesn't mean that I wouldn't take a short type of position on something else. But again, I'm not worried about it. But certainly if I were to guess, it looks like it could it looks like it's got an easier path to go lower than it does to go higher right now. And that's where you take the rest of this information into play right here. But for us, 85,000 and 92,000. Gold managed, now again, gold is pretty ugly today too, but really, was it ugly or did it just reach our level, okay, of about 4,400, okay, and fail? I mean, this is almost the exact opposite of the Bitcoin chart. This looks like when it breaks, it wants to break to the upside. I think we're 4,200 to 4,400. I don't think that's changed since last week. Okay. Again, this is telling you that there's way too much debt in this country. This is telling you that inflation isn't coming down in this country. That's what the metals are telling you. By the way, if you're wondering what the precious metals tell you, the message that they're saying to you is that we are in too much debt and inflation is not coming down. Okay. So, and they're probably going to go higher. Now, I said to Danny from ITM when I was in an interview with her, I said I would think that silver could see 65 this year. It did. Now, I said it was a long shot, but it got there easy. Okay. And silver looks like it's building a new level, a new base at 60. And I think silver now, we have to give it enough room, 60 to 65, because now it moves $2 to $3 a day. You know, we're seeing, like any other market, you know, back when I first started trading, a $10 day was a big day in the market. Well, now the ranges are getting wider and the prices are getting higher. So the percentage moves are still pretty much in common. Okay. But again, right now, a 6 or 7 or 8% move in any given day is no big deal in the precious metals. Okay. So I think you have to account for that. You have to play for that. Now, it doesn't mean you have to play. You can certainly sit it out and watch, but you have to understand that those moves are certainly possible. Markets are showing they are sensitive to debt, the metals, and the AI trade failing lately. Well, I don't know about the AI trade failing lately. I mean, AI's got some other issues that you can be a believer all you want in the AI technology, but it's gonna end up destroying this country as we know it today. It's going to create universal basic income, unfortunately. It's going to destroy jobs, and God forbid in this country, it's bad enough that we have no more social skills in this country. It's bad enough that people are stupid, okay, that don't have any desire to learn anything anymore, okay. So if anybody thinks that's good, I feel sorry for you because we're destroying any human skills that we ever had. And first, we destroyed the family unit, not family unit. Now we're destroying the ability to learn and the ability to have to do something in yourself. Okay, it's even when you go to a bank, they can't count the money by hand anymore. They got to run it through a tachometer because like nobody can count anymore from to 10 or to 100. It's amazing. Okay, I don't know if anybody else is concerned about that, but I'm certainly concerned about it, and not for like I said, not for me. Listen, how much time do I have left? 20 years? I don't know. I'm certainly concerned about it for the rest of this country, though, and for the kids. Anyways, platinum flying out. Well, broke out again. Now, obviously, this is not an all-time new high, but it is breaking out once again. It's on the run. Again, I don't really have a good level to give you. I would say probably if I were looking to be a seller, which I am not, but I would look at 1900. I think you're still hearing me, right? Can everybody still hear me? Okay. I get this connection loss, stupid ass message once in a while. Anyway, 17 to 19. Copper breaking out once again, but again, it's really held in that 550, that 520 to 550 level. It looks pretty solid, looks pretty strong. I don't understand why, but my only assumption, if I were to make one, would be that, back in the day, a number of years ago, the banks in China allowed them to use it as loan value. I can only imagine that because China owns the London Metals Exchange, that they're propping it up. Now, again, I'm not saying this is a fact. This is just okay, thank you. This is just a theory. Okay, it has nothing to do. This is just theory. But my theory is that China, because they allow it for loan value, could be artificially popping the price to protect all their loans. We'll see. I don't. That's just theory. Again, it's just as they say on Hanukkah, it's a bubby mice. Anyways, grains look horrible. I don't get it. I never thought this would happen like this again, but again, they're just brutally ugly. Support would next now be probably 510 in wheat. Again, like I said, I own some, but I'm certainly not rushing to buy more. Okay. I think you're 510 to probably 530 now. Okay. So from being bullish, I'm like, yeah. Corn, same thing, but corn is not as bad. But now corn is starting to break down, okay, from its level. I would suspect you have to look at 430 to 450. And soybeans are also, I mean, soybeans have come down over $1. And that was with all the supposed good news out of China. Okay. So for any of you farmers out there, all the good news, well, they must have rallied it on the news ahead of time, and now they're selling the crap out. I mean, if I were going to take a shot, it would be to the upside, but I don't have any desire at this time of year. As we wind down, I have no desire to take any shots. Okay, unless I have a reason. Was told that beans are of good quality this season, and the prices suck. The prices are horrible. But again, one of the things that everybody has to remember is commodities, unlike equities, are a supply demand business. Okay. They're all supply demand, but there is a true supply and a true demand in the commodities. And when there's an oversupply, the best price is going to win. And right now, the best price has to go lower. Anyways, I would say probably 1060 to $11. Cattle. Well, here we go. We're back on the run. So I was wrong at 225. We're now at 230. Again, but look at the liquidity. Look at how the liquidity is drawing out. So it makes it hard. China's been buying. Right. They have been buying. But the news is out. They have bought. And again, I think it appears to me that once again, the street got too excited on the news that they were buying and they pushed prices too high. You're in the business. What do you think? You're in this business. You're directly correlated with this. What's your thought? I got a big respect for your opinion. In the meantime, look, there's still a shortage of cattle. I don't get it. I don't know who's buying it. Okay. I guess, especially in this K-shaped economy. But again, it was fine when it was going down. Now all of a sudden we're charging back higher. If you're looking to be a seller, I might give them one more shot at 235. Right now we are 225 to 235. But again, I'm not anxious to get involved at this time of year. Just too quiet for me. Why do we have to buy beef? Why can't we buy pork? It's another form of protein. How about eggs? How about chicken? I mean, protein is what it is. I mean, if you can't afford it, you have to buy it. That's the question. It's a good question on your point, a good comment. So the question is if you're looking for a source of protein, I mean, you have to ask yourself, who's got the money to pay the price for steak today? How's that? How's that for a question? Okay. I mean, you go to the store. Well, how much is beef in the store right now? How much is ground beef? That would be the cheapest, I guess. How much is a pound of ground beef now in the store? So I don't know. Again, I think sometimes $8. Okay. My opinion, again, this is my opinion. This is what this whole thing is about. I give you levels that I'm reading the chart. And then when I give you my opinion is that only because we can spread our debt out longer are we seeing sales in beef and things like that people wouldn't normally buy if they were under a normal budget and had to pay their credit card bills, they wouldn't be buying so much. But because many got an extension to 2027, they'll get a surprise then. But that's to me what it looks like. Feeders, which I don't trade ever, but again, they're sitting right there around 340. I think 330 to 350. They don't look so good either, though. They look worse than fats or live cattle. And the hog market, again, I think hogs are probably getting near a bit overpriced as well. But again, still reasonable in compared to beef. I mean, we did break out. We called it. We talked about it. Ground bison $16. Oh my gosh. Hmm. 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 I think you're probably a little bit overextended here. I'm not, again, I am not recommending anybody do anything here, but I think 85 is about as high as they'll go at this point. Doesn't mean they won't go higher later, but I think 80, I think right now you're 83 to 85. Natural gas, which we did say this was a blow off and it was a good sale. Well, I guess it was pretty good. Okay, we're all the way back down. So you've made the complete V shape or the upside down V in this case. Not a surprise. We did nail it. Okay. And of course, $4 is probably support. I think they can go lower. Again, we're now after it looked to be a short squeeze. Okay. After the short squeeze, it appears that we have now seen the regular trade, and now it should go lower because there is no shortage of natural gas. There's no major demand. They've got plenty in stock. So let's see what happens from here. In the meantime, I'd look at it from 4 to 440. And crude oil, I think it's going to $55. And somebody, I think, asked me the other day if I'd buy it at 57 or 55. And my answer is, why would I want to buy this shit? I mean, maybe for a quick trade if something happens and it gives me a reason. But this and this alone should tell you the shape of the overall economy. There should be nothing else to look at than this crude oil. That should tell you how bad the economy really is. Because if we have no demand for fuel, which really represents about 80%, of our economy, when you weigh everything that's involved with it, not so good. So, anyways, I think you're looking at 55, which is my first target here. And I think that I'd be a seller at 58. 58, 55. It does mean there's a huge supply of crude. But there's exactly the point. Why is there all of a sudden a huge supply of crude? Again, let's go back to simple economics, supply demand. Okay. There's too much supply. Now you know that the oil companies aren't going to create too much supply. They have control of that. So what does it mean? It means they produced what they thought would keep the prices where they needed them to be, and yet the prices continue to fall. Right? Does that make sense? So at the end of the day, remember, you cannot control supply and demand. Okay. If you have an overabundance, you can create the supply you're willing to put out in the street, but you cannot worry about the demand. And if there's no demand, prices are going to fall.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.